Gold just hit fresh highs and money is rushing into ETFs, but the true wild card is still asleep. If volatility wakes up, this move can shift into overdrive, and that's what we're talking about in today's Stocks in Translation. Let's begin now with a chart of gold going all the way back to 2019, and we can see that midway into 2020, gold had rallied to a fresh all-time high that topped $1,900 an ounce. But it would be another 3 years before gold would truly break out and rally again. But all of these years of sideways chop would provide fuel for the next rally higher. And we can see three distinct ceilings that emerged recently as gold stair-stepped higher. And according to the work of Todd Sohn at Strategas ETF Research, ETF flows have been confirming these moves. But even though we've seen some spikes of money rushing into ETFs, it hasn't quite reached euphoria levels that has capped gold prices in the past. So in other words, there could be more room to run. So how far can gold rally? Let's zoom out with a longer-term chart of gold futures, which stretches all the way back to 2000 this time. And we can see here how gold rallied for a solid decade from 2001 to 2011. And remember that sideways action from the prior chart? That was only part of a larger sideways trend that lasted about a dozen years. And you can see that between the two dotted lines here. But at the right of the chart, focus on that now, notice the strength and slope of the current breakout from that box. The trend line is very steep, so there will be pullbacks, but the initial thrust is very strong, and we're up about 250% from those 2016 lows. That's not even half of the 650% move that we saw earlier this century. Now, let's take a look at some of the factors that's propelling gold higher right now. First up, central banks. They have been the biggest buyers of gold over the last decade. China and Russia, they started de-dollarizing in the teens, and now other central banks have been piling on. If central banks paused or actually sold gold, that would be a major headwind for prices. And we just talked about the recent ETF bid. It's not quite as important as central bank buying, but you don't want to see sustained outflows. Then we've also got dollar and government treasury yields. A weaker dollar and lower rates, those generally support gold prices. And 2025 has all been about dollar weakness, which is bullish. So right now, longer-term rates are a little bit elevated, and some investors are going to dump gold and buy bonds to lock in those higher rates. But the Federal Reserve is cutting once again, which is generally bullish for gold. Also, gold can benefit as an inflation hedge and an Armageddon hedge. So geopolitical uncertainty and higher inflation, they can be bullish for the yellow metal. Now here's the kicker. We've got one more chart of gold futures over the last 5 years in white, and we've added the ticker for gold volatility in blue, which is GVZ, which you can find on the Yahoo Finance app. You can think of GVZ as the VIX of the gold market. It's based off gold options, but unlike the VIX, which tends to move opposite stock prices, gold volatility tends to rise and spike higher as gold prices rally. So GVZ is relatively quiet right now, but if it starts lifting with gold prices, that can start a bullish feedback loop. So to monitor the gold fuel gauge, watch those gold flows in GVZ. If they get truly extreme, then watch out for a pullback in price. And we probably won't get any big reports of central bank gold buying until about early 2026, but keep that on your radar. Then also watch the dollar and rates. Lower tends to be bullish, higher leans bearish. Finally, if you like to trade the day-to-day swings, watch for surprises in the monthly inflation reports. Geopolitical headlines can also move gold, but you really don't know when those are going to strike. Bottom line is, gold prices and flows are already in gear, and the wild card is volatility. And tune in to more episodes of Stocks in Translation. We've got new episodes dropping every Tuesday and Wednesday on the Yahoo Finance site. You'll find them there or wherever you find your podcasts.